Have you met Silas before, Raleigh?
I have met Silas, absolutely. We met actually at one of your events in Las Vegas.
Okay, good. Well, y'all are two very special people to me. So I was going to say, if you hadn't met Silas face to face, we gotta make that happen.
All right.
Just to give a little preview of Silas, Silas and I have been working together on and off since probably 2005, and I meet a lot of people in our industry, and when I think of the people I know that really trade, that have really been in, just neck deep in the market, just saturated for decades. You hear a lot of people say that, but you haven't really witnessed it. And I've witnessed it with Silas, because we used to work 10 feet away from each other, and he was in the markets all day and still is. He and I worked together, and he went on me urging him a couple of years ago and created Seasonal Swing Trader, which is what he's going to talk about today.
Oh, great.
He's got these two beautiful little babies that I adore, and a wife that I adore. And once again, I keep saying this, but he's a great friend of mine and super smart. And I hope everybody, what he says today is going to be so simple and so smart. And you're going to be like, how did I not know that? And why am I not doing that? And so I'm excited today to watch you guys talk about this one little pattern that he does. You might think you know it, but you're not using it the right way. And I watch him give this presentation, and I'm just like, so many people need to know this. So Raleigh, if you'll hand it over to my buddy Silas.
There we go.
Silas, mic up. He's shotgunning a beer. Hang on. Corona in a can.
Oh, hi, Silas.
Oh my gosh.
Did you shotgun a beer? Is that why you were taking so long?
No, I was trying to, find the fireball, but
I missed it.
All right. Well, first off, sorry about that little mishap, but thanks to Jeanette for the lovely introduction. And I'm sorry I wasn't able to show my mug today. Don't have a mic on this computer, but I'm blushing with all those nice comments. But want to give a shout out to both Jeanette, Raleigh, the Trade Thursday and Westmark teams for having a wonderful presentation and summit, 3-day summit that they were invited me on today. Can just do another sound check real quick?
Yeah, you sound great. Coming through loud and clear.
I've lost the question, so I'm just a hot mess over here.
No, you're good. Can you hear me?
Yeah. Okay. I'm just going to keep going here, and I'll pop up the questions when I need. I want to do a audio visual check. Audio sounds good, I believe. Can everybody see my screen? Everybody see my screen?
Yep. Screen's coming through clear.
All right. We're going to go ahead and get started. There's the chat box. Okay, guys. So first off, my name is Silas Peters. I'm the founder, head trader, Seasonal Swing Trader. You are here to see my 3-point price action formula to spot market reversals for any market in any time frame. And I get really excited about this presentation because don't get me wrong, there's a lot of great speakers, a lot of quality content, a lot of quality education. And like a lot of other traders and educators on this summit this week, they've probably been around the block a few times, pretty much seen everything. And I am one of them. I've seen a lot of trading styles, methodologies, consumed a lot of education, and it's been part of the process. And I don't discount any of it. It's all great. But at some point, you do have to find out something that works for you, regardless of what market or time frame you may be trading in or interested in, and really buckle down, hone in on that skill. And that's exactly what I did with this methodology and this strategy, or this 3-point price action formula that I'm about to share with you. And you're going to learn it here right as we get into the presentation. There's nothing held back. I'm going to show you exactly how it works. It's so easy. You're probably going to start trading with it during the presentation. I hope that you at least listen to me, but it's something that you can literally start using. So I'm very excited about it, and feel free to ask all the questions you want. I'm not ignoring anybody on purpose. I want to make sure we get to the meat of the presentation and actually teach you the strategy and the setup so you can start applying it immediately. And then I'll get to all of your questions. And if we have time, hopefully I do. I burned up a couple minutes there with the whole mic issue, but we'll go look at the some live markets and see what's going on in the moment. This is Trading the Moment Summit after all. So let's go ahead and get started. Welcome. Let's always begin with the risk disclaimer as required by our regulatory governing bodies and our attorneys who require us to share. Past performance is not necessarily indicative of future results or a substantial risk of loss associated with trading. Only risk capital should be used to trade. You can lose money in trading. So what that means, the Cliff Notes version is don't trade with your rent money, your mortgage money, your child's educational funds, your milk money. You can lose money in trading. There is risk in trading. So just to make sure, I'm going to periodically do this because now I'm a little gun shy. Tell me where you're from. I want to see some interaction. Tell me where everybody's from. I want to make sure you can hear me. That's part of my test. Make sure you can actually hear me. I thought my kids, they built a fort under my desk over the weekend. So I thought maybe they jacked up my mic. So I'm in LA, not Southern LA. Not Southern Cal, but in lower Alabama on the Gulf of Mexico. So we've got Indianapolis, Germany, Ohio, Dallas, Canada, New Jersey, upstate New York, Tampa, Alberta, Colorado, Mumbai. Nice. Welcome. All right, cool. I'm sure you've probably done this exercise before for those that have stuck around all day, and I appreciate it. Olive Branch, Mississippi. Got some brother and sister that live in Hernando. All right, enough of that. Read the risk disclaimer. If you still want a version of this, I can send it to you after the presentation. I'm going to introduce myself once again. This is me standing in front of my alma mater at the University of Alabama in Tuscaloosa. I'd just like to show a few pictures here, show you that I am a human being. I am a robot. I like to get out and outside, outdoors, spend time with my family, especially my two girls there. When time allows, they're back in school now, so things are starting to normalize, I guess. But just to show you that we like to get out, especially during this time of the Corona conundrum or the Corona cocoon, if you will. And first off, hope everybody stays safe out there physically as well as in the markets. My journey, I started at the Chicago Board of Trade. So 3 days after I graduated the University of Alabama, I sold my car, packed up my belongings, and I drove north, drove straight north to the great city of Chicago, the old Windy City. It's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. I was bitten by the trading bug almost immediately, and I never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asia, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. Also been a part of building, managing several futures and equity brokerage firms, managing operations and trading, back office sales and support. Also worked as a private family office investment consultant. Hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. But my journey wasn't always easy. In fact, there was a learning curve, several obstacles and hurdles on the path to where I am today. First step was obviously learning. School does not teach real life experience in the markets. In the beginning, I made money. In fact, I made a substantial amount of money. Was I lucky? I like to not think that I was, but ignorance and greed cost me my profits. I blew up an account, then I blew up several others in what I like to call revenge trading. I'm sure some of you can attest to that. It's certainly no fun, but I do attribute it back to the process. I finally went back to my roots, settled down, found consistency, and that was jolted me on the path to where I am currently. Enough about me. Let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? I certainly hope it doesn't. This is a bad joke, poor attempt at humor. I found this on the internet. Thought it was funny at the time because I feel like it's the perception of what those on the outside looking in think that this is what we do as traders, that we're stuffed down in a basement, surrounded by all these monitors with all these colors and lines and numbers blinking and blanging. But no, this is not my desk. Now, my desk did look like this in Chicago for obvious reasons, but I've since pared back to a handful of monitors for charts, quotes, order entry platforms, and the internet for day-to-day operation. But let me see. Yeah, absolutely not. Somebody said, well, I've got 12. Hey, good, more power to you. But really all this does, and I mean it, is it leads to this slide. It's paralysis analysis. So who here is a victim or has been a victim of paralysis analysis? I'm raising my virtual hand. I've been there, done that, got the t-shirt. Per Wikipedia, it's a state of overanalyzing or overthinking a situation so that a decision or action is never taken, in effect paralyzing the outcome. So who here has done all the analysis they thought they possibly could? They've dotted the I, crossed the T. They got their finger on the mouse, getting ready to pull the trigger to execute the trade. Then whoops, what happens? This line crossed that line, or this number did that, thus negating our overall analysis. And of course, it's happened to a lot of you, or currently is happening to a lot of you. So I'm here today to help eliminate the paralysis analysis demons. Like I said, I appreciate the interaction so far. What do you trade? I'd like to see what kind of crowd I'm talking to. Do you trade stocks, options, futures, Forex, maybe even cryptocurrency? I trade all these actively: stocks, options, futures, and Forex, with the exception of crypto. I do have various accounts across the internet. Don't even know how to get it into half the damn things. I view it more as a lottery ticket. But let's see. So we've got options, futures, a lot of options traders, gold, crypto, indices, interesting, futures and futures options, equities, weekly options, FX and futures, S&P. Really a large mix, and typically what I see is options and equity options. Those seems to be the most favorable, followed by futures, Forex, and then crypto. So what I'm going to share with you works in all these markets. That's why I wanted to ask, because regardless of what you trade, it works in all these markets, and I'm going to prove it to you. What I'm going to share with you, it's highly accurate, it's profitable, it works in all time frames, and it's 99% mechanical. So we're not here to teach rocket surgery today, folks. We're going to keep things simple. In fact, I have an agenda and promise to you. We're going to learn this simple and mechanical setup together. That is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to stop and ask, have I fulfilled my promise to you? And I hope to see a lot of yeses. But I want honest, completely honest feedback. But I'm going to ask you, and you can answer yes or no. So speaking of promises, if you're familiar with any of my work, you may have seen or read something about the $10,000 trade promise. Well, full disclaimer, I'm not going to promise you anything in trading or in life, but these were $10,000 trade setups that we talked about in multiple free presentations such as this one. You see here we have a chart of crude oil on the left, RBOB and lead gas on the right. We actually have a third market, nat gas, that triggered to their $10,000 trade objective, and then some. We also talked about these sleeper markets in coffee and OJ. You can see here from a 5, 15, and 30-year historical price perspective, the markets tended to get quiet or bottom out at this particular time of the year. Does that mean that we went and got long these markets, that we went and bought coffee, we went and bought OJ, we bought call options, call spreads, sold put spreads? No. We said sit on your hands, wait patiently for the setup to trigger, the one that you're about to learn here momentarily, to trigger, and that's precisely what happened. They triggered and went and met on their $6,000, $7,000, $8,000 per contract price objective. We also looked at these sleeper markets in corn, beans, and wheat. Corn on the left, beans on the right. You can see it from a 5, 15, and 30-year historical price perspective. The markets tended to get quiet at this time of the year. That's exactly what was happening. They were being almost lulled to sleep by the market participants. We had favorable weather out in the Midwest. We knew not to be short this market, but did we go get long these markets? Did we go buy these markets, corn, beans? Did we buy call options, call spreads, sell put spreads? No. I said, wait very patiently for the setup, the one that you're about to learn here in just a few moments, to trigger, and that's what happened. They went on and met their $5,000, $6,000, and $7,000 per contract price objective. So this presentation is not all about futures. It's not all about commodities. I'm just trying to make a point here about how frequent and often these occur regardless of what you trade. So who here is ready to see the setup responsible for these recent trades, these very recent trades? Let's see who is ready to see this. Absolutely, of course you are. Otherwise, you probably wouldn't be here wasting your time. So these are very recent. This is the E-mini S&P. This is actually an 800-point winner on the S&P. This is 160 points in cocoa. This is 300 pips in the Aussie Kiwi, and two $20 trades or $40 trades in Facebook. It is, drum roll please, the 1, 2, 3 pattern, also referred to as the 1, 2, 3 top or 1, 2, 3 bottom. So who here is familiar with the 1, 2, 3 pattern? I would suspect 99.8% of you are. I certainly didn't invent it. It's been around for years. It's one of the most fundamental technical patterns in the textbooks. We're talking about technical analysis 101, but highly, and I mean highly overlooked by most traders. So like I was saying earlier, I was a bad boy. I went off the reservation chasing shiny objects. This is one of the first patterns I learned and actually had success with it right off the bat. But you know what? I was looking for the Holy Grail. When things stopped working for me, I said, what am I doing? I went back to the 1, 2, 3. This is a pattern and setup that I've been trading for almost 15 years. So pretty much everybody, a little small handful of knows, and that's great because I'm going to teach you this setup in detail, regardless if you're familiar or not. Let's talk about the setup. It's price action based. The pattern is comprised of a low and then a higher high and a higher low and a break of that higher high in the case that we were going long. Inverse, the rules are the same, but inverse of short. Anticipates a change in trend from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So one may argue, well, is this a counter trend strategy or a reversal type strategy? And in essence, it is, but we're going to talk about ways we can filter these out to even further increase the odds in our favor. I will stress it works extremely well when the pattern sets up as significant or important areas of support and resistance. Other high probability technical patterns such as head and shoulders tops and bottoms, double tops and bottoms, and so forth. So let's talk about the basic mechanics. This is a chart of could be Caterpillar, could be heating oil, could be Dollar General. It doesn't really matter. We're learning the very basic principles and mechanics. So here we have 0.1. That's the highest peak when we find resistance and then start to trade down. Once we start trading down and stop making these higher lows and pull up, we get an established number 2. Market trades higher, pulls back, giving us established number 3. The market could have traded up here, or even up here, as long as we don't take out the number 1 high. We have a 1, 2, 3. Now, 1, 2, 3 top traders are looking to get short on breaks or closes below the number 2. And that's exactly what happened. Let's look at a 1, 2, 3 bottom. Again, doesn't matter what market this is, doesn't matter what time frame. Same rules apply, but only in inverse. So here, the market has flushed down, and we found the lowest low or support, giving us our number 1. Market trades higher. Once we stop printing these lower highs and pull back, we get an established number 2. Market trades lower. Once we stop making lower lows and pull up, we get a number 3. Market could have come here, down here, or even here. As long as we don't take out that number 1 low, we have a 1, 2, 3. For a 1, 2, 3 bottom trader, we know we'd be looking to get long on breaks or closes above the number 2. We don't know what happened in this particular example, but those are the rules. Let's look at some chart examples. This is a daily chart of the Australian dollar, the 6A, the Aussie futures. If you don't trade futures, you could look at FXA, the ETF. If you don't trade ETFs, you could look at the Forex pair Aussie US. You're going to see the same pattern, okay? So this is a daily chart. Now, we don't always have to look for 52-week highs or 52-week lows on the daily chart. But in this example purposes, we're going to look for a new 52-week high. And that's what we get. This red circle here is a 52-week high, and it gives us our number 1. So we have a 1. The market trades lower, pulls up, giving us a number 2. We only retrace higher by about 4 bars here. Again, we could have come up here, or up here, as long as we don't take out the number 1 high. But we stop here. 1, 2, 3. Now, for a 1, 2, 3 top trader, we know that we're looking to get short on breaks or closes below the number 2. And that's exactly what we get. So you pretty much know all the rules, right? You know exactly where to get in. But wait, what about the other important ingredients of the recipe? Like, where's my risk? What about my limits? Where am I taking profits? All very important things we need to know. So our initial risk is going to be placed above the high of the 1. Our initial target is the distance between the high of the 1 measured to the low of the 2, measured down. Measure from here to here and then down, which is about 225 ticks, $2,200 in this particular example. Now you'll notice right off the bat, yes, it is a 1-to-1 risk-reward ratio, but we're going to talk about ways later where we can quickly cut our risk fairly quickly. So can anybody tell me where's the next logical area of risk to be placed? It's very important to let the market begin to materialize in our anticipated direction, because it does more often than not. So yes, above the number 3. So once we start breaking down, it's moving lower in our anticipated direction, the next logical area to move our stop or trail our stop to is above the number 3 high. So you can see we very quickly can cut our risk by 50, 60, or maybe even 70%. Let's look at another 1, 2, 3 top example. This is a daily chart of Walmart. We have a number 1. Why? This is a 52-week high. 1, 2, 3. We know what 99% of other traders are already asking themselves. Well, where am I going to get in? Where am I putting my stop? Where am I taking profits? We know that days in advance. We know we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the high of the 1. We know our target is the distance between the high of the 1 measured to the low of the 2, measured down, which is about $5 in this particular example. Let's look at some 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. Now, for an intraday chart, whether it's a tick, 5-minute, 15-minute, so on, we're obviously not going to be looking for 52-week highs or 52-week lows. It wouldn't make much sense. So on an intraday chart, we're going to look for what we call session highs or session lows. How do I define session highs or session lows? Well, very simply, we go back to the Globex Open. We go back to the Globex Open. So if you don't trade, if you're not familiar with futures Forex, they trade virtually around the clock, opening on Sunday afternoons at 5 Central, trading into the Asian session, European session, to New York session, shutting down for about an hour at the end of the day, reopening, rinse and repeat through Friday afternoon. So wherever you start your trading day, you're going to be looking for new highs or new lows from that point forward. So if you're trading the 3 a.m. European session, maybe the 9:30 Eastern New York Open, maybe the lunch hour, maybe the last hour of the day, you're looking for new highs or new lows from that point forward. Okay, so here we have a new session low as indicated by the red number 1 circle. 1, 2, 3. Now, aggressive traders may be working a buy stop, a tick or 2 above the number 2 high here, and they're triggered into the trade. A couple of alternative entry methods that I prefer are to either A, wait for the market to come back and retest the number 2 breakout area, which it does more often than not, or secondly, wait for the market to come back and hook back up through the breakout area. So see the market came up, we traded back down and hooked back up. So using that entry method, one of 2 things are going to happen. 1, you're going to miss out on some potential profitable trades. Sometimes the market will bust up out of the breakout area and zip up the profit target. But don't worry, the market will leave you at the trade station, but don't worry. There's always another market and time frame around the corner. But what is it also likely going to do? It's going to keep you out of potential false breakouts. Sometimes we'll bust up, market rolls back down, rolls back down, never comes back up, stopping you out. So if you wait for that hook method, that gives you that additional confirmation. Let's look at another bottom here. 1, 2, 3 bottom on a weekly chart of Apple. Hell of a way to catch some longer term position type moves here. We have a multi-week low. 1, 2, 3 also have a high probability double bottom. Market breaks out above the number 2 here on this large bullish candle, then trades sideways for a few weeks, comes back down, retest, and or hooks back up. That's our confirmation to get long Apple. How do we play this? We buy Apple stock, we buy call options, call spreads, sell money put spreads. Whatever your flavor or style of trading is, that's how you can take advantage of these powerful moves. Now, I want to show you an example of a failed trade. Hate to burst your bubble. They don't all work. There is no holy grail in trading or in life, but we're all big boys and girls. You already knew that. But this is a trade I probably took in my live account. I like the trade. It's a 5-minute chart of the E-mini S&P. We have a 1, 2, 3. We also have a trend line break. Aggressive traders may be getting short here on this initial breakout here. Or if you wait for that hook method, the market trades back up, then back down, and you're back into the trade. You're up by maybe 1 or 2 points here. Not sure. And if you exercise any kind of money management, you're stopped out at the next area of resistance here above the number 3 high. Or if you didn't do anything, you're stopped out at the initial risk here above the high of the 1. But look at what happens. We get a new setup. This high is greater than that high, so we get a new number 1 count. 1, 2, 3. Market trades below, gives you a retest, and then trades to the downside, end up being a profitable trade. Now, here's an example of a no trigger or voided trade. It's neither good, bad, nor ugly. It is what it is. It's just a voided trade. I'll tell you in a second why I like when this happens. Why? We have a 1, 2, 3, looking to get long. What happens? The market wants to go lower. This low takes out that low. We start to count over. 1, 2, 3, looking to get long here. Market wants to go lower. This low takes out that low. We start to count over. 1, 2, 3. We're able to finally get long in this last attempt. Now, can anybody tell me why I like it when this happens? You get a gold star on your crown if you could tell me. Yes, lower lows, that is true. But flushing out the lows, all good guess. But what's likely happening here is divergence. So simply put, in the most simplest terms, is we have a low, price actions make a lower low, and a lower low, but we're likely having some type of divergence. So if you use any type of momentum oscillators, say RSI, MACD, stochastics, it doesn't really matter. We're likely making higher lows, or i.e. no lower lows there, thus giving us our divergence. And we'll talk about adding those kinds of things here on a little bit. Let's talk about 1, 2, 3 pattern trade management. Again, confirmation of entries on a break above the 2 or B point for a long, or a close below the 2 or B point for a short. Exit strategies. I would say that if you're only trading one contract, whether it's one futures contract, one option contract, one share of stock, one Forex pair, go for the distance between the 1 and 2 as your initial target. It's uncanny how more often than not it will go tag that often to a tick and then reverse. But if you have the flexibility to trade multiple contracts, which is where we all want to be, right? I would say, hey, take a third off, 2/3, half your position at that distance between the 1 and 2. And then however you manage your trade or your position is really ultimately up to you. Nobody can tell you how to manage your trade, right? So you have to figure out what works best for you, but they all come a dime a dozen. For me, I like to target good old-fashioned support and resistance levels, but you can trail your stops using trend line analysis, candles, moving averages, par-SAR, fib numbers, and the list goes on and on. Point is, you have to figure out what works best for you. So I've showed you that the setup works on any market, whether you trade pips and Forex, Pepsi stock, potash or pot stocks, pork bellies, or the Polish zloty. Also showed you it works on any time frame, whether you trade a tick, 5-minute, hourly, 4-hour, daily, and more, and on any trading style. Are you a position trader, swing trader, day trader, scalper? I'm gonna take a swig of water here. Type in what your trading style is. So we've got a lot of swing traders here. Day and swing, not sure yet. Weekly options. Long term. Scalpers. Yeah, that's great. And generally speaking, the lower the time frame, the more difficult it is, or the more attention is required. But regardless, you've got to find out what your bread and butter is. I like to ask that because you have to find out what your bread and butter is. Just like what I showed you about managing your balance, you have to figure out what works best for you. We're all trading, all have different situations, the time we commit, different education levels, different capital, just preferences of life in general. You have to figure out what works best for you. For me, I found that I like the 233 tick, the 5-minute on S&P, NASDAQ, crude, 30-year bonds, occasionally currency futures, the hourly and 4-hour for the currency futures and a handful of commodities, and the daily for all markets. That's where I do a lot of equity options trading, swing trading, commodities, commodity options, and FX. And that's where I got started in my trading journey, was looking at intraday charts, and it was probably the best thing that could ever happen to me. So you've seen the proof. Let's look at some real trade examples, not to say that what we just looked at were fake examples, but let's look at some real trade examples we've utilized in some of our services. I'm gonna start here with crude oil. Everybody is familiar with crude. They love to talk about it. And especially this year, we had a wild crude market there in February. But regardless, if you trade CL futures, USO, maybe other leveraged crude ETFs, you're gonna see the same patterns and setups, okay? So I'm gonna work myself from left to right on the chart. You guys and gals can read the text over here. So we have a 1, 2, 3. Why? This red circle is a 52-week high. 1, 2, 3. It's a smaller 1, 2, 3, but it is still a valid one nonetheless. we knew immediately where our entry was, we knew where our stop was, and we knew where our target was, okay? So here we have a 1, 2, 3. We knew we're looking at short and breaks below or closes below the number 2, and that's what we get. We quickly moved down, met our $3 or $3,000 per contract price objective. Then we went into sideways or consolidation mode. So I get asked all the time, does it work in consolidation markets or range-bound markets? In essence, yes, it should, right? Because we're really only looking for new highs or new lows, which is what I'm doing. But there are 1, 2, 3s that appear inside a range. 1, 2, 3 ends up trading to the upside, ends up being a nice trade. But I'm only looking for new highs or new lows. So that's exactly what we get. We get a new high. This high is greater than that high. 1, 2, 3. Now, let me tell you why I got excited about this particular setup. Well, one, because of the high probability pattern in the 1, 2, 3 top that I've just taught you. Secondly, we're at a time of the year from a seasonal perspective where crude oil and energy markets in general tend to trade to the downside. So when we have those two things line up, it's what I like to call the perfect marriage in trading. So what happened? Well, we got short. How? We sold crude futures. We bought put spreads. We sold out of money call spreads. We traded USO and other leverage ETFs. We broke down at our $4,000 per contract price objective. And then we trailed the market until we either got stopped out or we had a potential reversal. We have a potential reversal here, potential reversal here. Let me tell you why I started foaming at the mouth at this particular setup. Well, because of the high probability 1, 2, 3 bottom pattern. Secondly, we are at a time of the year from a seasonal perspective where energy markets tend to trade to the upside. In fact, this is one of the best seasonal trades I have in my back pocket. And third, we have probably my second favorite technical pattern, which is the triangle. And that is a beautiful, clean triangle. It doesn't get much cleaner than that. So this market sold off another $20,000 per contract. We didn't catch the entire move, but we damn sure caught a large chunk of it. And again, until we either got stopped out or we had a reversal. So I was ready to get long here and reverse the position, but what happened? Market sold off, broke out of the triangle, which it should in its continuation pattern, sold off another $10 for $10,000 per contract. We finally made another last flush low down here, 1, 2, 3 bottom, and that's where we reversed and got our $5 or $5,000 per contract and continued to trade to the upside. Let's talk about gold. Everybody loves to speculate on gold, talk about gold, make predictions. I get a kick out of people that, subscribe to these expensive overseas gold newsletters. Gold's going to go there. Gold's going to go here. Who cares? Look at the chart, look at the price action, and let it help dictate to where gold is likely heading, okay? Now, this is actually a chart of GLD, the ETF that tracks gold futures. I like to look at the commodity futures chart first. It's a lot cleaner, a lot more fluid. You're not going to see all the gaps because they're trading around the clock. But if you want to start with the ETF, that's perfectly fine, okay? So here we have GLD, 1, 2, 3. Market breaks lower, gives you a retest, reaches $4 profit objective. Market trades lower. All we're doing now is waiting for a potential reversal to the upside. 1, 2, 3. Double bottom as well. Break above, give it a retest, reach our $2 profit objective. Here we go again. We're trading sideways, just like that crude example. Here's a potential 1, 2, 3, boom. Here's a potential 1, 2, 3 top, boom to the downside. Nice, clean, beautiful moves. But I'm only looking for new highs or new lows. If you want to trade the range-bound 1, 2, 3s, by all means, help yourself. There's plenty of opportunity there. So here we are starting to make new lows. These lows are taking out these lows. So we're on high alert. We're making new number 1 lows, potential 1, 2s, potential 1, 2, 3. But oops, this candle here, if you can see it, takes out that number 1 low. So we start to count over. No worries. 1, 2, 3. Market gaps higher 2 days in a row. Can guarantee you didn't see that on the futures chart, but either way, boom, boom, and then it comes back down to retest the breakout area, also get our trend line retest. That's our confirmation to get long gold. How? We buy GLD options. We buy gold futures. We sell out of money put spreads. However you like to trade, okay? So I want you to remember this chart and the subsequent charts and that crude chart because I'm going to show you something really special here in a few moments. Delta Airlines. This is probably becoming redundant by now, but I'm just trying, again, to hit home the fact about how frequent these occur all day, every day on every market. Here's Delta. 1, 2, 3, market gaps up, comes back and retests, trades to the upside. Here we have a 1, 2, 3. This one gaps down below the number 2 breakout area. I don't particularly chase those. I've got students that will sell the, they'll take all these setups, so they're buying puts, selling stock right here. We get another chance to get short. 1, 2, 3, market breaks down aggressively below the number 2. We get a small retest there, good for an $8 plus move, and we flip to the upside. 1, 2, 3, market trades above, retest, trades higher, pulls back, and then zips up to the upside. All right, for you Forex traders, 4-hour chart of the CAD, Swissy, Canadian dollar versus Swiss franc. Here we have a multi-session low on the 4-hour chart. 1, 2, 3, double bottom as well. Again, if you're one of those aggressive traders, you're getting long on that initial breakout. Boom. If you wait for the retest and or the hook back above, you're getting long here. You meet your 70 pip profit objective. Now what? All we do is we wait for an opportunity to go short. 1, 2, nope. 1, 2, nope. 1, 2, nope. 1, 2, nope. Finally, 1, 2, 3. It's a smaller 1, 2, 3. Break down, trade sideways, come back and retest. Hits our 40 pip profit objective. Day traders, I get asked, does it work on an intraday chart? Of course it does. This is a 5-minute NASDAQ chart here. Here we have a 1, 2, 3. Market breaks above, comes down and hooks back above, hits our 13-point profit objective. 1, 2, 3. Market breaks down, retest a couple times, gives us a little bit of heartburn. Finally breaks down, reaches our 20-point profit objective. We get one last low here. This is probably the last hour of the session. 1, 2, 3. Market breaks above. If you're lucky enough to get long in that retest there, you reach your 30-point profit objective in about 2 bars. So why are you here? You're here to learn a mechanical done-for-you strategy for all markets and all time frames. This is the part of the presentation where I ask you, have I fulfilled my promise up to this point? I'm going to take another swig of water here. Have I fulfilled my promise? I hope to see a lot of yeses, but no pressure. And if you type no, you at least have to tell me why. You at least have to tell me why. Because I don't know how to break this down even easier, but I'm happy to take suggestions. Yeah, the crude target was small, but as you can see, you'll often get some continuation there. Still, I'll take a 4-figure move any day. All right, everybody says yes. That's no lie yet, no no's, no smarties. But if you want to say no again, hey, I can take it. All right, so feedback's good so far. Everything seems clear so far. Let's keep trucking. So have I shown you enough proof? But wait, there's more. You knew it was coming. Usually when the individual says this, it's not a good thing, but I can assure you that in this case it is. Especially in the South, they say, hold my beer and watch this. Usually doesn't end well at all, but I can assure you that this one will. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the targets were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? I don't know about you, but I would say that would be pretty amazing. So do you remember the examples that we just went through? I hope you do. It's just a few moments ago. Who remembers the crude example we just talked about? So let's talk about what's going on here. You're smart people, but let's talk about, excuse me, what all these arrows and these colors mean. Green arrow is your number 1. Red arrow is your number 2. Blue arrow is your number 3. Pretty simple. What about this white chevron or sell signal? That's not a sell signal. This is not a buy signal. This is a visual aid almost waving at you saying, hey, we've broken or penetrated below the number 2, or we've broken or penetrated above the number 2. So this is saying this is the candle or the bar that took out the number 2 high, or this is the candle or bar that took out the number 2 low, giving us a potential setup. So what about the lines? So once we do get that break, so if and only if we get a break of that 2, you're going to see the chevron. And if and only if that happens, you're going to get these 4 beautiful lines plotted into your chart. Well, what do the lines mean? The blue line could be considered your entry level or your breakout level. Your red line is your risk or stop level. Your lime green line is what I call TP1 or profit objective 1. And your dark green line is TP2 or profit objective 2. So if you recall, TP1 is the distance between the high of the 1 measured to the low of the 2 measured down. And the dark green line is 2 times the distance of TP1. Here's that example on gold. 1, 2, 3. We break above, we hit TP1, TP2. Here's that range bound market that we talked about. We don't get any signals because we're looking for new highs or new lows, but down here we start getting new lows as indicated by the green arrows. Why all these green arrows? It's because it's telling us we're making new lows. These lows are lower than these lows. We're clearly trying to make a new bottom down here. 1, 2, 3. We finally get it. Market just nips its head there above that number 2 high, giving us our print. TP1, TP2, you see we're starting to make a 1, 2, 3 top over here on the right. Here's that Delta airline example. There's the long, there's the short, there's the short, there's your long. Here's the 5-minute NASDAQ chart. Here's your short, 1, 2, 3, market breaks down, hugs the breakout area, hits TP1, hits TP2, hits TP2 to the tick. And notice that TP2 actually also happens to be a new session low. So we get a new number 1 count. 1, 2, 3, market breaks above, hooks back above, hits TP1, doesn't quite hit TP2, but it's close enough for government work. You should have lost any money on the trade. Then we go sideways, okay? We make a new session low. This low is lower than that low, so we get a new green 1 arrow. 1, 2, 3, market just peeps its little head there above the number 2 high, which gives us our print. We trade lower, trade back up, come back down, hit TP1. As we're looking for TP2, notice that we're making new session highs, new number 1 prints. That's cluing us in. It says, hey, we may need to get ready to reverse this market. Well, we actually hit TP2 before that happens. Here we get a final 1, 2, 3 top of the day. We break down, it comes back up, which it likes to do sometimes, and then it hooks back down, hits TP1, hits TP2, and you see we're starting a new 1, 2, 3 bottom down there over in the bottom right-hand side. So is this training for you, or was this training for you? If only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise we talked about, the paralysis analysis, if you want to just simplify your trading and add another strategy to what you're already doing, or if you want a very step-by-step specific mechanical plan that you can do part-time, this training could be for you. So I like to stop and tell a little story here, is that when I had this built out, I brought my wife down to my office who teaches ballet part-time. I brought my 2 girls down to my office who were like 4 and 5 at the time. They don't know a flying flip about the markets. Trust me, they don't even know what I do. But I said, look at this. Of course, after they calmed down from looking at the candles and the colors and this and that, I showed them what I was attempting to do, and they got it. They actually understood it. So my point to you is that if they can understand it, then you certainly can too. We don't remember kindergarten. I don't remember kindergarten, but if you remember your primary colors and you know how to count to 3, that's about all you need to know with a dash of common sense. So because I was invited on this special 3-day summit, I was able to come up with a very special offer for today's attendees. And we do limit this to 25 spots. It's no gimmick. We do honor this because I am a human being. Like I said earlier, I do manage my own inbox. I do have a support team, but I actually manage my own inbox, and I communicate and value our feedback with our members. So we only have so much time, so that's why we have to limit this. The special offer is the 3S Code High-Low Indicator Scanner. We've had this built for Thinkorswim, TradeStation, NinjaTrader 8, Ninja TradingView, and MT4. Also going to include chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, and VIP email support. We're also going to include access to our private Discord channel. If you don't know what that is, talk about it in just a few moments. But what the heck is a 3S code high-low indicator and scanner, you ask? Great question. Let me refresh your memory. This is the 3S code on your chart. 1, 2, 3. This is 3S code plotted onto a daily chart of CRE. This is what it looks like on a daily chart of Bank of America. Nice, easy, clean, simple swing trade setups. Here's a daily chart of Love, LUV, Southwest. 1, 2, 3 top, hits TP1 to the tick. Here's a 1, 2, 3 top. Whoops, bad trade. That one's a loser. We get stopped out. We get another chance to go short. Why do all the work when you can let technology do the work for you? This is a screenshot of my Thinkorswim platform where I'm scanning for 1, 2, 3 tops in the Russell 1000, only stocks that are optionable, $20 a share or greater. Hit the green scan button, and voila, what would take years to scour through the markets is done in seconds. Here's a screenshot of watch list. I have one monitor dedicated to watch list where I'm scanning across multiple asset classes, across multiple time frames at the same time, and you can do as well. Now, we've been looking at Thinkorswim. This is what it looks like on TradeStation. Here's your indicator component. Here's your scanner component. Here's what it looks like on NinjaTrader 8. Here's your indicator component. Here's your scanner component. Here's what it looks like on TradingView, 4-hour chart of Apple. Here's your indicator component. And here's what it looks like on MT4, 4-hour chart of the Euro Kiwi. There's a long, there's a short, there's a short, there's a long with some moving average overlays. Full disclaimer, there is no scanning component available on MT4 or TradingView. It just simply doesn't exist. Now, if you know a Russian programmer that you want to introduce me to, please, by all means, we'll have that puppy built out. But you do get the indicator for all 5 platforms, but only the scanner for TOS, TS, and NT8. Now, we know there's no real crystal ball in the markets, but I like to view this as one that provides me with a daily process. I'm using the platforms to scan the markets for me, locate the setup, go to my platform for entry, and I manage to trade through the exit. And you can start doing so today with the 3S code. So here is your special offer. It's 3S code high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get chart pattern principle PDF manual and trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and access to our private Discord channel. Now, we have no joke offered these on the internet at these prices, $19.97, $14.97, and $9.97. But I was able to come up with a very special offer limited to the first 25 people for a one-time fee of $397. The offer link is seasonalswingtrader.com/code. And yes, this is a one-time fee. You own the indicator and scanner and all of the bonuses for life. Let's talk about what the indicator and scanner include. You're going to get a visual plot of the 1, 2, 3 top and bottom reversal areas, just like I showed you. You're going to get the entry, exit, stop, and target levels, all color-coded, customizable settings, like I showed you earlier. If you don't like red, you want hot magenta. You don't like lime green, you want puke green, you can change the colors. You want dots instead of arrows or hashes instead of arrows, you can change that. Multiple look-back periods. So this is what I was saying earlier. If you want to expand your settings to increase the value to find less opportunities, you can do that. If you want to dial it in tighter to find more opportunities, you have the ability to do that. You can scan for setups only or trigger only or both. So what does that mean? When we first had the scanner built out, you could only find those that were in the process of setting up, those that had not broken above or below the number 2. Had a member write in and say, hey, can you scan for those that have triggered, meaning those that have actually broken above the 2 or the number 2 points? Well, I don't know. Let me go back to my programmer. We were able to do that. We've made so many enhancements since the beginning of this thing. Haven't charged a single red cent, and we never will for any upgrades, okay? You can scan for intraday setups as well as swing setups across multiple instruments all at the same time. Bonus 1 is 90-plus page PDF chart pattern principle trading manual guide. You can download it to your desktop, print it out, use it for firewood. I don't really care, but you're going to learn option strategies, additional strategies, how to identify trend and range markets, other high probability chart patterns, seasonal market strategies, and more. Bonus 2 is my 25 top option strategy guide, literally strategies for all account sizes, whether you're learning to trade basic calls and puts to more intermediate advanced, such as condors, verticals, butterflies, diagonals, and more. Bonus 3, access to our private Discord channel. Something we're very proud of that's just starting to gain steam. We launched this maybe a month or two ago. It's not a trade room. I view it more as like a chat room. It's open 24/7. It's where anybody can come in, all members of the 3S Code, come in, they can post their charts, they can post their analysis, commentary, ask questions. Hey, what do you think about this? What do you think about that? What's working, what's not? Really great community and hub for everybody to help each other locate quality setups. Here are some unsolicited testimonials. I don't ask for these. They come in all the time. Very pleased and humbled, but most importantly, happy that people are actually taking action with the 3S Code, because that's what it all boils down to, is taking action. And here's an example from one of our services where these trades were based off of the 3S Code and the 3S Code alone. And I do eat what I cook. Here's a screenshot of my Thinkorswim platform where I do my equity options trading, and my futures platform where I've got, I got crude options, cotton options, copper options, yen options, nat gas options in the S&P. And then in conclusion here, just to show you how easy these are to spot with the 3S Code. Nice 2-point trade winners here on the S&P. So I'm going to take some questions here, and I hope that looks like I've got about 5 minutes or so. So we're going to be a little bit rushed. I wanted to look at some markets too, so you can see how we are now trading in the moment. You get it? Trading the moment. Let's see here. So no, this is not a subscription service. This is a one-time fee. There's no hidden renewals, no hidden subscription fees, nothing in a year you're going to get surprised, no shenanigans, no tomfoolery. How long does it take to get the indicator to be installed? If you're able to log into this presentation, you're probably up and running in about 5 minutes. So that's a good question, and I did want to show the members area. So here we have all of your resources and bonuses that we didn't even talk about, how to customize the indies, setting up scans and watch list, day trading, swing trading, Thinkorswim, PDF manual and a video. I also did a short little video on the free seasonality widget in Thinkorswim. That's not a requirement. I am seasonal swing trader after all, so I do incorporate seasonals in my intermediate to swing positions. Don't use it for intraday. TradeStation, V10 and V9.5, NinjaTrader 8, TradingView, and MT4. These are all short little videos. Just follow the step-by-step instructions. There's nothing an hour long, 2 hours. We don't need it. Just follow the step-by-step instructions. Very simple to install. But hey, I'm not a computer wizard. Realize that people run into problems every now and then. And if you have problems, my support guy can actually log into your computer via a remote session and set this up for you in no time flat. So what I wanted to do is also want to take some symbols from you. Yes, you get access to all indicators, all platforms, William. So we don't limit licenses or anything like that. We just ask that you use the honor system there. Yes, you can load it on a laptop and PC. What is the exit signal? The exit signal is your first target is the number it plots onto your chart. So crude oil, here's crude oil trading in the moment, if you will. This is TP1. These are the exit signals. I mentioned about the settings. Here's where you can come in and tinker around with all the settings. I know you engineer types like to mess with the settings. I've got it pretty much black and white, out of the box right now. So what you see is what I see. What I see is what you see once you get up and going. But if you start changing the settings and the values, then of course, yes, you will get different settings.
Silas, hey, while you're on the screen, Raleigh here, quick question. Yep. that I saw. How far back do you look on a chart to determine whether it's a new high or a new low?
So great question. So, and I've got the full explanation in the members area, but anything greater than 4 hour will go back 126 bars. That's just the default setting right here.
Okay.
So that really, what that equates to is about 6 months. So like I said, in the PowerPoint, we were looking at 52-week highs and 52-week lows, which are of course high probability setups. but I dialed it in to say every 6 months, it just lets me see a little bit more opportunity. And then on an intraday chart, anything less than 4 hours is going to go back to the Globex Open. And that's really going to apply for futures and Forex. And then on a equity, which does not trade in Globex, of course, is going to go back to the Cash Open at 8:30.
Yeah, that makes sense, because as you pointed out, you know, once we got a little range bound, there were still some nice 1, 2, 3 patterns in there. But as you said, we're waiting for new highs or lows. So that answers the question. There's a setup for that, for determines how backward. Yep. Gotcha.
Exactly. And so, like, what I'll say, you know, if obviously where we are in the markets, you know, it's just a continued straight shot up. So look at this daily chart of the S&P, or if you trade SPY or whatever, you see the same thing on SPY. Notice that our last 2 setups, we haven't had a setup since March. But you know what? We caught this high back in February, and we caught the Corona low in March. Now, we didn't catch it to the bottom tick, but look at these reversals. I mean, these are huge moves. But so, like right now, my scans on a daily chart, we're finding more 1, 2, 3 tops than I know what to do with, because why? where we are in the market, you're not going to see too many 1, 2, 3 bottoms on a daily chart of equities. So if that's got you, you know, well, there's not enough action for me, or I don't want to look for short setups. Go down to a lower time frame. Go to an hourly. Go to a 4 hour, maybe a 5 minute, a 1 minute, depending on what you trade. If the risk is too much on a daily chart or a weekly chart, go down to a lower time frame. And then what I will also tell people is, you know, learn how to trade minis and micros and options. That they allow so much flexibility, especially if you're doing intraday trading, you're worried about getting your face pilled. Trade the micros, trade the minis, trade options. You can participate in these moves without losing sleep. And I think I'm about done here. If you want it via PayPal, email me at support@seasonalswingtrader. We'll work with you.
All right. Well, outstanding. Silas, thank you so much for a terrific presentation. And Jeanette was right. Very, very straightforward, simple approach. You kind of pinch yourself just a little bit as to how logical that is. And I love the way that you built it up. And wouldn't it be great if this was plotted for you automatically on your screen? Outstanding. Guys, the special offer, the 3S code with the high-low scanner. Man, that scanner is fantastic. You know, and the indicator.
And
then thanks, team. Have a great day. Thanks for having me.
Yeah, you're welcome. And then, of course, the simple, mechanical strategy, and it works on Thinkorswim, TradeStation, NinjaTrader, TradingView, and MT4. Seasonalswingtrader.com/code and take advantage of that wonderful special offer. Thank you, Silas. And